Bang, bang, Bitcoin today. I hope you're doing well, you guys out there. Another video regarding the overall market and Bitcoin. And before we start, you guys, this is no financial advice. You have to make your own decisions. We just try to help you with some information to make a decision. And I think the first thing we do is to start to check the overall market. And this looks nice and green today. More or less everything is green. It's not bad. Also, the tech came back because we had, for many weeks, we had a tech rally last, 5-6 days. It was a bit on the decline, but anyway, it's back. There's one thing which is worrying, and this is the 2 years against the 10 years yields. As you can see, 4.7 to 3.7, so the spread is 1%. This is not good, and historically this was a strong sign for a recession which could come, and for this reason we quickly check the rate hike expectations from the market, and here we see, according to the CME watch tool, 80% or more than 80% of the market believes that we see another increase in rates. Bear in mind we have 5% already, so next move would be 25 base points. We will see if this is going to happen, but anyway, this is what the market anticipates. For this reason, we check gold, and gold is suffering from this because gold doesn't pay any interest rates, and we are down actually in the moment to $1,912. And here we come to a Bitcoin. This is live on a daily base, 30,448. So we are sitting, as I just said, on a daily basis, we are sitting quite stable here over the $30,000. That's a good sign. We later will check the technical data regarding this. But this looks very nice. And next thing is going to be the market capitalization. And this is very, very good because we moved from 13 to 12. We are on $590 billion. So we are close to $600 billion. Very, very strong. Block time, 796,299. Network is very stable. And here the halving clock, 292 days we have to wait. There's a slight change to April 16 now. And here we come to the news. Bitcoin miners sent record of 128 million revenue to exchanges. Well, they make money. The average production price for Bitcoin in the moment, due to estimations, is about $16,000, mainly because of electricity, but also amortization for all the equipment. And we are sitting on $30,000, so these guys make money, and that's good because of this we're able to invest in infrastructure, and they actually do. And here we come to something else very important: leverage Bitcoin futures ETF launch set for Tuesday. This is massive. Everybody's talking about spot ETF, but we have already on the Chicago Mercantile Exchange future ETFs, and now the SEC announced that they approved a leveraged ETF with 2x. So this will start on Tuesday, and it shows really that Wall Street is getting more and more into the Bitcoin. This is actually what it is. Okay, so a very, very interesting week was last week actually, and important in this week is, are we stable over the $30,000 after all the news which came in? And it looks like that we do. But still, there's a very strong resistance line about $32,000 we have to jump over. This is very hard to manage. And for this reason, we will look into the technical details. And we start, first of all, with the Fear and Greed Index. And here what we can say is people are really very optimistic. We have 62% of a market which believes price will go up. We see this also on the timeline. Yet when we look into the heat map, today all red, but very red are all the crypto coins. And this has a lot to do with the news in the moment that Bitcoin as we only commodity and everything else could be security. And we see this in the dominance, 51.84%, close to 52% of the total market is Bitcoin. Ethereum has another 20%, so over 70% are two coins. That's very strong. All right, here we check the liquidations on a daily basis. We had heavy liquidations on the short side, as you can see, but it calmed down a bit now. Interesting is the loaded addresses, and we are constantly over 48 million. This is very strong. Another thing is, which is very important for us, is the relation between the hash rate and the Bitcoin price. And we always say the price follows the hash rate. This is on 1 year's base, and you see, although we had quite a lot of volatility in the price, the hash rate constantly went up, and we had a divergence here about 6 weeks ago between hash rate going up and price going down. But we catched up now, as you can see. So this is a very bullish sign. Another thing which has changed recently is the Bitcoin Google trend. Very, very interesting. For quite a while, we had a downtrend, as you can see, so people had not so much interest in Bitcoin. But this is going up now. Huh? We obviously saw the bottom of interest, very important, because when people come in, are more interested in Bitcoin and use of Bitcoin, usually the price should go up. We see now Bitcoin on a yearly base. And we see, well, coming from the bottom, obviously we more or less doubled, that we are quite stable over the $30,000. And here we come now to something very important. I think this is a historical day. Very often in the past, I talked about this, that we have to see a bullish crossover on a monthly base from the MACD. Why is this important? Historically, when you look here, whenever we had this bullish crossover from the downside to the upside, a new bull run started. This is the orange line over the blue controlling line. And we were moving in the last couple of months towards the blue controlling line. And now I zoom it out, it happened. It really happened due to the price of, as you can see, over $30,000, that we just matched the blue controlling line. And historically, this was the start of a new bull run. So congratulations to everybody who is invested, I would say. Okay, but here we come to a problem, the volume. The volume is still not high enough. We have not enough traders in the market. Yes, this is on a weekly basis, by the way. All the bars you see is 1 week in the closing. And last week, for the first time, we went out of a red box into the yellow box. That's very good. So we have to wait by the end of this week if we can confirm an increase in volume, because we are still on the level of 2020. Very important. Okay, and here we come to our trend following models. We start, like always, with the Bollinger Bands. Well, we had the breakout, as we predicted for quite some while, to the upside, quite strong. But, as you can see here, on the MACD, most likely we reached top because the green bars were on a downside. Also, when you look at the RSI, we are in the region of 70%, so we are, in a way, very much over board. So a little bit be careful. Our indicator says could be a little bit of downside potential to around about $28,000. Well, our first cycle model is very much on track to the real price. Amazing, only $331 is the price. Is the model underrated in regard to the price? But still really amazing. We are on track. Our second model says more or less the same. Well, Wyckoff, I just said we wait for confirmation of volume. This is important because phase A, B, C, D is finished, and we only can get into phase E as we get a confirmation on price and volume. The price itself is not enough. This is a timing, not a timing indicator. This is a momentum indicator, and this is something it will keep you informed. Fibonacci, very good. We are in the golden box, 61.8. We are quite stable for a couple of days now in there. So we wait to the breakout to a 76.4 would be great. We haven't had it so far. 50 versus 200 days, very good, because far away from a 200 days line, also over the 50-day line. So also this looks very bullish. Well, our ribbon bands, 7 ribbons we have, and interesting is underneath what the situation is. All the ribbons are under the real price. As you can see, the green line is the price. And the 5 days, 10 days, 20 days, 50 days, 100 days, 124 days, and 200 days is all underneath. This is a dashboard system, meaning that in the moment, if you want to take profits, well, some people are long-term investors, obviously we're not interested, but for short-term investors, this is most likely more time to sell than to buy, because the whole thing goes vice versa. As the price goes under the ribbons, it's a time for investment. In the moment we are above, and well, this you can watch also in the future as we talk about it. Well, finally we come to the regression model. Another 10 months we have to wait, because we are in the end of cycle number 4. So finally, again, this is not financial advice. You have to make your own decisions, but we always give in the end a sort of idea of what could happen to the price in April 1624, so 9-10 months from now. And our prediction is still around about 43, 44, $45,000. Okay, I hope it was valuable information. It would be great to see you again. Thanks and bye-bye.